Joe Kinahan is chief derivative strategist at ThinkorSwim. He joins us from the Chicago Board Options Exchange, where he is paying very close attention to equities. JJ, they call you. Let me ask you this question. I just mentioned Apple being a weak stock, dragging down the NASDAQ. We've seen both Apple and RIM hit recent highs, but all of a sudden back off. What does that tell you?
Well, it's very interesting to me that they've kind of been the darlings, and it seemed there for 2 weeks. People would pay any price to own Apple and RIM because they truly did lead us up. Very interesting that they're starting to weaken right now. We just came off Apple earnings. We have RIM earnings coming up next week. What I find interesting is that Apple's volatility is still stayed relatively high after earnings. RIM, you would expect the volatility to go up going into earnings, but when volatility goes up, as we've talked about in the past, that usually means there's a little bit more fear, and people have a bit of a fear that these stocks may continue lower. So I think they bear watching. As they let us up, it could be the techs that actually lead us down. The financials seem to be, I don't want to say great right now, but they seem to have at least set a base. They're holding steady, but it's been the techs that have really been the story here over the last few weeks.
JJ, techs are in fact leading the market down today. A lot of people think about fundamentals such as quality of products, consumer demand, things of that nature, specifically as they concern Apple and RIM when they look at the BlackBerry and the iPhone, for example. But what else do those stocks tell us about the way investors are thinking about equities?
Well, again, you know, as we headed up, and you're right, people think about the products themselves. Of course, you have to do that. Obviously, the consumers love the products. You just have to look at Apple sales to see that. But what I find interesting is that we all looked at the financials for so long, and actually I think the whole focus of the market has shifted a little bit away from those to the tech stocks and commodities. Tech being one, commodity stocks being two. Seen a lot of action in those spaces over the last few weeks. So I think this really bears watching. The fact that we have to keep our eyes now on, does oil continue higher or does it stay, come off a little bit? We're starting to see the tech weaken. I'm not saying that we're going to collapse, but we could be due for a sell-off. What's also interesting, don't forget, next week's a huge expiration week on Friday. We have everything coming off on the same day. Next week should be a crazy week because people will be unwinding their positions all week long to get out of all the stuff they've accumulated so far.
JJ, one quick last question.
Sure.
You mentioned volatility as it concerns Apple. Let's talk about volatility as it concerns the whole market. The VIX, the measure of volatility we look to, holding well under 30 right now.
Absolutely, and 30 kind of being the magical number. If we stay below 30, there doesn't seem to be a really big reason to panic. Actually, a little surprising to me that the VIX hasn't exploded more today, although it is a summer Friday, shall we say, so it may be a little bit slower. But that bears watching next week to give us a clue as to what's going to go on with the rest of the market as we head into expiration 1 week from today.
All right, JJ Kinahan from ThinkorSwim joining us from Chicago. Thanks so much. You have a great weekend yourself.